So Pantera Capital's been investing in blockchain and crypto since 2013. We launched the first institutional Bitcoin fund in the US. We brought on a lot of people super early who were just starting to dabble in it. And back then, Bitcoin was at $65.
This episode is brought to you by Uphold, which is a great crypto platform that I've been using since 2018. Uphold makes it easy to buy, sell, trade cryptocurrencies like Bitcoin and altcoins. In fact, they have 300 plus cryptocurrencies on their platform, and they carry precious metals such as gold and silver, and you can swap between these assets. So it's really unique. Uphold is safe and reliable. I've never had any issues with them, and they are 100% reserved. You can review their transparency report. They don't commingle or lend out your funds. Now, Uphold recently launched a great product called Uphold Rewards, and it's packed with many benefits. You can earn up to 5.25% on stablecoins, get 24-hour early access to new token listings, and unlock exclusive crypto insights. And they support a variety of stablecoins, such as PYUSD, that's PayPal stablecoin, Circle's USDC, and USBC. They will be supporting Ripple's upcoming launch of RLUSD. So this is a really great rewards program. And if you'd like to learn more, please visit the link in the description. Hey everybody, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Franklin B., who's the general partner at Pantera Capital. Franklin, great to have you on.
Thanks for having me, Tony. I love your work.
Franklin, I'm excited to chat with you. Pantera has been a leader in the investment space as far as crypto, with Dan Moorhead kicking things off very early in this asset class. So have a lot of questions for what you guys are currently doing and your outlook on the market and much more. But let's start with your background. Where are you from and what's your professional background?
Yeah, sure. So I've been building and investing in crypto and blockchain for the past 10 years. As crazy as that sounds,
Wow.
pretty much since 2014, I got into the space really just dabbling in Bitcoin myself. And then at the time, I was at JPMorgan. So I started my career there. And in 2015, got the chance to start the blockchain team at JPMorgan with a couple other people. Basically kicked off all the work that we were doing around tokenization, building on Ethereum, and eventually launching things like JPM Coin and our enterprise Ethereum stack Quorum, which was acquired by Consensus. About 5 years ago, I joined Pantera Capital and have been investing in and working with early stage founders in crypto ever since then. So I spent a lot of my time on DeFi, infrastructure, gaming, and everything else that's come along.
Very cool. And what was your first encounter with crypto and or blockchain? Was it at JP Morgan or did you hear about Bitcoin outside of JP Morgan?
It started outside of JP Morgan. It was actually in 2014, I was traveling in China, visiting family, and I really wanted to watch Sunday football, American football. But Sunday ticket is not available outside of US geographies. So the only way to do that was through a VPN.
Mhm.
The good VPNs are only available if you pay in Bitcoin, which is what I learned. And so I was desperate enough to watch football that I ended up opening an account at Coinbase, sending Bitcoin to a wallet address, and getting to watch a little bit of football. But it just switched something on in my head because, all of my time at JP Morgan was basically spent trying to figure out how the payment system works, how banking rails work. And when this Bitcoin transaction went through, it just said to me, wait, this is not how it's supposed to work. Something must be really different here. And so I started diving in. And, my role at the time at JP Morgan was in corporate strategy, which just happened to be the perfect place for JP Morgan to kick off a project to figure out what the hell should we do about this whole blockchain thing, right? So the way that typically works is somebody senior comes along, reads an article in The Economist about blockchain, and then comes to the corporate strategy team to say, hey, let's figure something out. Because I had that one experience with Bitcoin and I had been studying on my own time, I raised my hand for it. turns out nobody else was raising their hand for it, and so I got to take it on. Spent 6 months of my life just figuring it out and seeing what opportunities there were for us to get involved. And it was convincing enough, I think, that we decided to start a full-time team really early on, almost before any other bank. And the goal was to just start building and see what we could figure out.
That's amazing, Franklin. Multiple takeaways here. At one of the, if not the largest bank in the world, you were spearheading blockchain and crypto initiatives, kicking that off. I think it goes without saying, well, we have to bring up Jamie Dimon, your CEO, well, former CEO, well, your former boss, I want to put it that way. I will fire anyone involved in
Yes.
Bitcoin. I remember those comments. He's said negative things over the years, yet JP Morgan was doing a lot of these initiatives. What was it like working at JP Morgan and hearing those things from Jamie?
Yeah, I mean, I was definitely just grateful for the opportunity to start building. I think when you're at an organization that big, there's room for schizophrenia,
Mm,
right? There's room for two different ideas or thoughts to exist at the same time. And it was really on us. The burden was on us to try to convince Jamie, try to convince people who reported to Jamie that there was something here that was not a scam.
mm,
I don't know if we ever succeeded at the Jamie level, but we succeeded with many others in the organization to say, look, there is something really magical happening here, right? Payments are happening, whether we like it or not, between people around the world. And it's happening outside of the systems that we use every day, whether it's Swift or ACH. And what that means is there's technology now doing something that wasn't possible before.
mm.
So whenever you see that being the case, that technology is going to find a way to add value to the world. Now, what that means for JP Morgan and the role that we could play there, I think, is something that we had to figure out, right? We wanted to build at first on the Bitcoin blockchain, which was really hard. When you've got transactions going every 10 minutes, there's not a lot of things that can be useful or additive. But when Ethereum launched in 2015, that just opened up our imagination completely. We were thinking about how to tokenize assets, how to move things like lending on chain. And the mission for us was to go around the bank and try to convert people and say, look, let me draw a picture of how things work today and where everything's inefficient or just not working well. And here's what it could look like if it was happening on a blockchain. Do you want to work on something together?
Mm.
And sort of inch by inch, day by day, we got people to buy into it up to the point where, now there's real products launching out of the JP Morgan blockchain team. There's payments that are happening between banks on chain. And all of that eventually, I think, will sort of merge with what's happening in the rest of the blockchain ecosystem, right? The things in DeFi and crypto, lending and gaming that I think will all sort of bring about this new financial system that we think is possible because of blockchain technology.
Franklin, I think you got a book to write here, my friend. I mean, to be at JP Morgan and just with the context of everything that's been going on and where the industry is now, it was not the same back then. There were a lot of headwinds. So I think you got an amazing story to tell there.
Yeah,
Um,
it's such a different time now. Back then, I mean, there was so much pushback. Every meeting that I would walk into was sort of a half joke, right? I mean, sometimes you would just have people laughing when I left the room because they thought it was just so impossible, or they thought the technology was only used by criminals, for example. And so that was a lot of pushback to get through. I think towards the end of it, we had made a lot of progress. But now, when you look at the Bitcoin ETF having launched, you look at, all the different banks and brokerages now figuring out their own strategy for serving crypto assets. It's come a long way.
mm. Quick question about JPM Coin. Why why was it built for more internal use and not public use? Because it was running on Ethereum or was it Quorum? You have that public blockchain. Why was a decision made for it to be more of a closed project?
Yeah, I think the way to think about JPM Coin is it's all part of an experimental phase. It's not necessarily a final decision. It's more of a snapshot in time,
Mm.
right? And so, some of the use cases that we saw were, could you make payments happening between banks more efficient? Could you take a lot of the things that were happening around corporate lending and make that more efficient? But in order for that to even get started, you do need what we now call a stablecoin. And so JPM Coin was more of an enabling sort of decision, right? To say, look, let's get something in place so that we have a way to get dollars on chain in a permissioned environment. But that allows us to start building other things, right? To start building a payment network, to start building a new version of debt capital markets or securities trading. And so I think there's a lot of people who try to extrapolate from JPM Coin to say, this is the final state that banks think will eventually take place. But I'm a little more optimistic. I think actually the real benefit is that it allows people working at banks to just start playing around the technology. And then eventually there's going to be a merge of all the crazy, creative, interesting things that startups are building and all the things that institutions have been practicing with. And when that all comes together, I think it'll actually be on public blockchains. It's just right now, we're still in the phase of people coming to that realization.
Oh, sure. And then what is it like for you to look back at where things were then and where they are now, where you have the world's largest asset manager, BlackRock, tokenizing on Ethereum and other blockchains? You have the ETFs, as you mentioned, and there just seems to be an embrace of this technology and asset class, and it seems to be an arms race now. Everybody's trying to, get the best ETF, get the index ETF, do tokenize this money market fund and whatever it may be.
Yeah, it feels like the domino effect is starting.
Mm,
That's really what it is because when you think about what tokenization does for assets, it's really just a better product at the end of the day.
mm,
A tokenized version of a dollar, a tokenized version of an Apple stock is just better because number one, it can travel 24/7 on chain. And number two, it can travel globally. When an asset becomes accessible the same way that an API does, it just becomes a modernized asset, right? And so the domino effect of these kinds of things really start when people experience that better product for the first time. So when someone makes a payment in a stable coin, or they see the difference between a tokenized asset and the one that's in their traditional portfolio, it's hard to come back from that, right? And so I think it will still take a lot of time, but every time something is tokenized, whether it's a BlackRock money market fund or a US dollar by Circle and Coinbase, like USDC, it gives just more people that experience so that they can go back to their brokerage, their Fidelity and their Franklin Templeton and say, we want more of this, right? I think that's really it. Is institutions are going to make this decision when their customers ask for it, not before. And so, when we see tokenized assets act as better products, that just kicks off this flywheel that I think is going to lead to everything eventually being tokenized.
mm. Yeah, and I mean, it seems like there is a whole bunch of new markets are going to be created, secondary, tertiary markets, like you mentioned, the 24/7 aspect, and then access to liquidity globally because anybody can access it. They got an internet connection, and obviously, barring rules and regulations and all those things. But it's just fascinating, and it seems like there's a paradigm shift, a huge
Mm.
change in the financial world that's taking place right before us.
Yeah, it's easy to call it a paradigm shift, and I would actually almost make it one level more practical, which is I think it's a value shift. The retail investor who has, portfolio of stocks and bonds will wake up one day and realize that there are two prices for the assets that they own. There's the price of the tokenized asset, which has access to a global market of capital, and anybody in the world who wants that asset can bid on it. And then there's the old asset, the legacy asset that's sitting at the New York Stock Exchange, has access to less people, less investors, and doesn't have as much accessibility globally or 24/7. And when they see that their neighbor's portfolio is worth more than theirs just because of that, it just comes down to, the historical truth of money makes the world go round, right? That's going to be the time when, the snowball effect becomes so massive that I think there will be demand from everywhere, from for institutions to kick off the tokenization process and get all of their customers on chain.
Mm.
So that's really the inflection point that I think is coming, is when someone wakes up one day and says, wait a minute, why is my share of Apple worth $5 more just by being on chain? That's not something I can live with. We need to change that.
Right. And then you add DeFi into that, where if you hold those tokenized shares and tokens, or however you want to say it, you can do more with it and lend it out to different people across the world and much more.
I think that's right. It comes back to tokenized assets just being better products, right? When everything else in our lives is enabled by technology and is enabled by the internet to sort of its maximum potential. You think about the kids who are playing Fortnite and Roblox today, right? Their first concept of money and assets comes from things that live within a completely digital world, right? So when they walk into a bank branch for the first time, and they're told, wait, to open a credit card, I need to do this. I need to come in person. Wait, to make a payment, I need to wait 2 days. It's just going to be so bizarre for them, right? And if you tell them that, wait, there's this other version of the financial system that acts the way that things act within the games that they've been playing for years, then I think they're going to see that they can do a lot more with it, right? When something becomes software and can act like an API, it becomes composable, right? It becomes useful across so many different other applications. And so there's examples like being able to borrow against your portfolio that today are just extremely manual and legacy and relationship based between you and your bank, that should really just be accessible by anyone.
Mm. Yeah, well put. And it's a brave new world. It's a bit scary in certain fronts, but to your point, the world is only going to get more digital, and the generation that's growing up now, they're not going to be used to walking into the bank, doing checks and all these things, right?
They're
That's
not
not
going to
going to.
take it anymore. Yeah.
Yeah. Now, obviously, you guys at Pantera, your job is to analyze and take a look at what's happening to change and take bets on companies and projects that might be building the next Googles and Amazons of Web3 and so forth. For those who may not know about Pantera Capital, give us a quick overview.
Sure. So Pantera Capital's been investing in blockchain and crypto since 2013. We launched the first institutional Bitcoin fund in the US. We brought on a lot of people super early who were just starting to dabble in it. And back then, Bitcoin was at $65. So we've been able to take that all the way forward to now over a 1000x return, which I think makes a lot of people happy, but also, we've been able to help them hold through this entire time, which is very, very rare. Um, and so, that laid the foundation for us to really be involved in the whole ecosystem early on. And since then, we've been investing in early stage venture and in token projects through the past 10 years. So today we've got about 250 portfolio companies, amazing founders at leading protocols and companies like Circle, which originated USDC as a stablecoin, Alchemy, which is used by probably the most developers in the blockchain ecosystem, Arbitrum and Starkware, two of the leading layer twos. And nowadays we're partnering with folks on gaming, stablecoins, exchanges around the world, just to make sure that we're continuing to onboard more and more people into the blockchain ecosystem.
Mm. And what type of investors are participating in these respective funds?
When we first started out, it was a lot of high net worth investors. It was family offices, folks who were just really dabbling, some technology entrepreneurs, perhaps. And that's evolved over time. I think we've always kind of tried to fight this battle of trying to bring on more people into the ecosystem and more types of companies, institutions. So nowadays, that's really shifted. We've been able to partner with institutions, whether it's Ivy League endowments or pension funds, or folks abroad who are corporate and strategic in how they think about blockchain. And it's been really fun because it feels a little bit like my time at JPMorgan, where you get to brainstorm with these folks. They're not just investing, they're also trying to learn about what role they can play, for their company, for their institution. And so we get to show them the types of portfolio investments we're making. We get to introduce them to our founders to see if they can work together. So it's been great to have that evolve over time and have more types of investors involved.
Mm. And are you seeing more demand given the likes of BlackRock and Franklin Templeton and Fidelity are here, and there's so much embrace of this technology and asset class with the ETFs tokenization, but also on the political front, a very big change in the approach, a more favorable environment for crypto. Are you seeing more demand?
Where we're seeing the demand really change is among entrepreneurs. I think that's been one of the most heartwarming parts of really getting past this whole phase of regulatory uh, pushback and uncertainty. When you think about the past 4 or 5 years, it's really just been a battle. We had 2021 where there's just a ton of excitement about what was possible with blockchain and crypto. And, you saw a flood of founders come into this space just looking to build something. And all of that really just kind of got crushed and dissipated when, we had a few crises that happened within our industry, like FTX and Celsius and BlockFi. And we had to deal with all of that. But also from the outside in, we had regulators push in and pursue folks that were absolutely good actors like Coinbase and Uniswap. And we had banks start to turn off access too. So almost all of 2023 felt like it was a wash. We lost a lot of great entrepreneurs who just saw too much risk in going down this path and turned away from the industry. And now hopefully we're going to see them back in because a lot of that risk has been taken off the table. We're seeing a more of a political embrace of crypto. As much as the current administration, I think, is going to play a huge role in that. I think the biggest observation I had was pre-election, the months leading up to it, when both sides of the aisle really started to change their policy stance on crypto and blockchain. Whether it's because one forced the other to do it or not, that's just the game of politics. But that was the real shift, was that, no matter where things go, we're going to see over the next 10, 15 years that both parties in the US will try to play a constructive role on crypto and blockchain.
Absolutely. And boy, I'm so excited for 2025 because of all these things you mentioned. Donald Trump, pro crypto president, pro crypto Congress coming into office, of course. You got a bill that made it out of the House this year, Fit 21. It's going to go through the Senate. That's what most people are saying, and the different associations who are educating folks in DC. And then, the 4 year cycle is playing out, global liquidity, Bitcoin having all these things. It's exciting. I can't wait. I'm sure you guys are at Pantera excited as well.
We are. It's an amazing convergence of everything that we've been working on, right? And I think it's really just opening up the potential that we've always seen in the space, but just hasn't ever been fully unleashed, right? I think a lot of the times when you hear people ask about uh, the consumer applications in crypto and which ones are going to become the killer app, well, it's really hard to find that when everything is being pushed down by regulation and by just basic access to banking and payment rails. And that just takes the oxygen out of the room. So finally, I think we're in a place where those things can thrive. And the next killer app, whether it's for payments and remittances, or if it's for gaming and more consumer use cases, they'll finally have kind of the full clear runway to actually go and take off, which, we're super excited about.
So let's talk a bit about gaming. I know the term GameFi was coined back in the 2020-21 cycle. And I remember certain uh, gaming platforms built on blockchain, they had tokens and so forth. But to be quite frank, and I'm not the biggest gamer or anything like that, there was nothing that appealed to me. And maybe it's just further iteration that's needed. But maybe the appeal needs to be to the masses, right? The people who are gamers and so forth. What's your outlook on that? And do you expect new types of games to be put into place and to have better incentives for people to participate?
Mm. Yeah, it's a great question. So when I think about the first wave of crypto gaming or GameFi, looking back, it feels like there were a few missteps, right? I think the first one was that on the business model side, there was this move towards play to earn,
Mm.
right? Paying people to play the game through tokens and viewing that as real growth and viewing that as a business model. I think that was probably a misstep in the sense that it helped drive monetization of the game because people had to, for example, in Axie Infinity, had to pay money to start earning within the game. And I think the mistake was thinking of that as real monetization when really it's a growth tactic, right? We
Mm.
can use this as a way of gathering more attention to the game, but ultimately we need to figure out a different way to monetize it. So I think the change really is that the business model this time around makes a lot more sense when you think about marketplaces as the big unlock for blockchains being used within games. So marketplaces to me are the perfect business model for great games. Actually, even better than anything else we've had in free to play games or mobile games, because when you think about game developers and how they're aligned with players, if you're talking about normal, traditional free to play games that we have on our phones today, those developers are optimizing for ad revenue
Mm.
and for microtransactions. So, what that means is we're going to end up with games that end up trying to stuff as much ads into them as possible, or trying to get people to buy just one more 99-cent item to get one more level in the game. And it just becomes a worse playing experience. When you think about play to earn, the optimization for that is, well, you end up serving speculators and you end up with something that looks like a Ponzi, right? You have to get more investors and more speculators in so that you can pay the previous ones. And so both of those just end up being a poor business model in the long term. A marketplace, though, is perfect. That's perfect alignment because what you end up with is a game that makes more money when players interact with each other, they buy and sell from one another. So, as a game developer, you're really incentivized to build as vibrant and engaging and interactive of game as possible. You could do that for as many years as you can, but ultimately, that's true alignment between them. And so, with blockchain being used in games, what that really unlocks is this concept of uh, games going from being advertisers and sort of e-commerce stores to now becoming marketplaces.
And do you think a part of it is also whatever token or whatever it is I earn in that game? I'm not able to take it into the real world like USDC or stablecoin or whatever, right? That there needs to be some interoperability there, some sort of bridge to so I can move it to Amazon or whatever and use it.
Hmm. Well, that's definitely an unlock for blockchain gaming. The user experience actually feels so much different because it's integrated with the rest of the world. You can go and take your assets within the game. You can take the currency that you've been earning and actually sell it to other players. Use that USDC to go and buy goods or even buy more things within the game. And so that's something that back in 2019 and 2020 wasn't possible, right? There were just too many interoperability issues, too many issues even with just the wallet experience. Today I can log into a game that we've invested in, King of Destiny, on my phone. I don't have to have a wallet going into it. I can just start playing. And at some point, if I want to buy or sell things that are on chain, whether it's on OpenSea or somewhere else, I can just do that within the game because there's embedded wallets, which the game has set up for me. Now, this was not really something that was possible until we really had this kind of developer tooling and infrastructure available. And so today, to be able to onboard so many more people who aren't crypto savvy, aren't maybe technical yet, and say, look, you can interact with things that are on chain without ever having to figure the rest of this stuff out, it just opens up the funnel, right? Axie Infinity, they peaked at maybe around 3 million monthly players. We're seeing games like on Telegram, Catizen, Notcoin, etc. They're reaching 100 million players now.
Wow.
And, some of these have 40 million daily active players. So just thinking about where we are now with gaming and why it's so important for the rest of the crypto ecosystem too, I think of it almost as what I call a Farmville moment,
Mm, yeah.
which is, for folks that are familiar with how Facebook grew to what it is today, it started out as this collection of college campuses and students who kind of maybe knew each other. But the real network effect for Facebook kicked off with Farmville, which was the first kind of social game on Facebook where mom and pop players, casual suburban players were playing this. And suddenly it felt like everyone around you was on Facebook just to play Farmville. And the numbers played out too, right? Farmville actually onboarded 80 million people to Facebook.
Wow.
And so, that's basically the entirety of all of crypto today in terms of who actually has an active wallet. So, yeah, I think it's so important for us to invest into gaming because of this. The frontier of consumer adoption almost always happens through gaming.
Yeah, great points. And I'm thinking of, and I'm sure in some of these blockchain-driven games, they're approaching the major game developers, the guys who made Call of Duty and all these things, to try to see how they can collaborate together and bring that customer base into these models. I don't know if those conversations, I don't know if you know if those conversations are happening.
Yeah, they're definitely happening because of what's happening in traditional gaming now,
Mm.
which is that it's really becoming a tough industry. The margins are going down. It's getting more and more expensive to acquire players. And so traditional gaming companies, I think, are seeing the writing on the wall and saying, look, we can only milk this free to play model for a few more years before players get sick of it or it becomes so competitive and saturated that there's just not enough to go around. We need to look around for the next business model.
Yeah.
But at the same time, it's hard to think of a Fortune 500 company leading the way on innovation anytime, right? It's just really tough to be disruptive when you have a successful company already. And so I actually have been really excited to see new talent and new founders coming out of these companies and saying, as an individual in the gaming industry, I see the writing on the wall. And I see that Web3 has the right business model for us to build better and more successful games. And so, in our portfolio, we've invested in teams like the Infinigods team, which created the King of Destiny game, former serial entrepreneurs from the free-to-play world who have had a lot of success, former number one games in their category, now turning their heads to Web3 gaming and saying, look, I want to have the same kind of success, but for the next generation. And then other teams like Azra Games, Mark Otero, the founder of Azra, he's one of the most legendary gaming founders in the world. He created Star Wars Galaxy of Heroes, which is pretty much the most successful Star Wars game of all time, 1.5 billion in revenue. And he's just one of those entrepreneurs who has had successful games in multiple cycles. So in the desktop world, in the mobile world, and so his ability to see the next thing coming, I think, is exactly what we're betting on. And to him, Web3 is very obviously the next thing.
Yeah, I mean, I'm excited for it. I'm waiting for that moment, like you said, the Farmville moment, right? To see when, um, the masses, the average Joe and Jane, so to speak, they're like, oh, I got to play this game, and it's a Web3 based game. It's powered by blockchain, and there's tokens involved, and much more. I'm waiting for that moment. Not that some of these games are not having success, but the mass awareness, I guess, where it goes maybe viral, if that's the right word.
Yeah, definitely. I think it's coming. The funny thing about gaming is, like you said, there's different games for different people. And the first wave of games may be more casual or may lean towards a genre that you might not be familiar with. But the magic of gaming entrepreneurs is that they're so practical. They're
Mm.
probably one of the most practical kinds of entrepreneurs that you'll ever find because they'll just look around, see what's working, and say, wait a minute, there's people having fun there and there's other entrepreneurs that are making great money there. I'm going to figure out how to incorporate that into my game. And so, whatever kind of game you like, I think once we start to see some of the early success in Web3 gaming, it'll start to spread very quickly, and you'll see new games coming out that are embracing what's working.
Hmm. I'd love to get your thoughts about stablecoins. We kind of touched a bit on it earlier. You mentioned you guys are invested in Circle. We're seeing a boom in the stablecoin market. I think Ripple just got approval for their RLUSD stablecoin. PayPal launched PYUSD. Tether is still in the market, even though it's facing some regulatory challenges. I spoke to the folks at VanEck recently. They launched AUSD. What is your outlook on the stablecoin market, and do you see some consolidation here eventually because it's going to get too saturated?
It's a good question. So, right now, I think we're very much in the experimentation phase with stablecoin issuance. I think everyone recognizes that making payments through stablecoins are an incredible business to be in and truly additive to the payment system as a whole, right? When you think about the average person in the US who's sending money abroad, right, whether it's to their relatives in Mexico or the Philippines, they're paying Western Union 12%, right? Almost an entire month's wages, if not more. And with stablecoins, they can access this open source technology, this open payments network, and be able to do the same thing for a fraction of that, right? I mean, even less than a percent, depending on how much you're looking to send. And so I think everyone recognizes that stablecoins are the future rails for payments. But the question is, well, who gets to actually be the company that's modernizing money for all of us, right? And so everyone, I think, is hoping to play a role there. There's going to be consolidation. I think that's the way that we've always seen just currencies play out,
Mm.
is that there's one that emerges that everyone trusts, everyone understands, and the more that it gets adopted, the wider the network effect goes. So I think over the next 2 or 3 years, you'll see two things. One is a lot more issuers of stablecoins, a lot more experimentations with different kinds of models, whether it's the ability to integrate yield into a stablecoin and actually have yield-bearing stablecoins that make money for you by automatically being invested into things like treasuries, or you'll see different kinds of organizational structures, right? Circle and Coinbase had a joint venture to produce USDC at first, but we could see coalitions of banks coming together, maybe mega banks, maybe smaller community banks saying, look, we're sending payments amongst all of us all day, every day. Why don't we just turn all those flows into a stablecoin system? But I think at the end of the day, the market's going to decide, right? It's going to decide what actually matters. Who's issuing the stablecoin or the functions that are actually built into it. And that's the fun kind of product innovation that's going to happen from here on. But the other thing you're going to see is just, I think, more stable coin payments volume. And that I think is going to be up and to the right with no stop. Because ultimately, what we're talking about is modernizing money. That's something we should all be striving for. It's something our central bankers should be thinking about because that's how empires rise and fall, right? It's how attractive is it to use your money versus mine? How accessible is it? And so I think it's going to be a race to become the most modernized money across all the different countries in the world. And hopefully, we'll see the US dollar staying ahead of that race.
Yeah, great points. And there's so many implications of a US dollar backed stablecoin, to your point, maintaining the world reserve currency status. And you got BRICS and there's a whole geopolitical aspect to this.
Oh yeah.
Second, I personally use USDC on Coinbase to earn yield because it's better than what JP Morgan gives me in my checking and savings account. And then, the speed of instant settlement and cheaper costs. Like, I kid you not, I had to send some money to my cousin recently. She lives in Guyana, my home country. I had to pay a ridiculous fee, but she's not up to speed on how to use the wallets because I would have loved to just send her some USDC and it would have been right there and way cheaper. So there's so
Yeah.
many implications there.
Yeah, actually, that's a great topic too, is just how much easier it is becoming to start using stable coins. And one of our companies that we just invested in recently is called TipLink.
Mm.
What TipLink's really good at is exactly that kind of situation. You've got an uncle or aunt abroad, and you want to send them some money, or they want to send you some money. TipLink actually lets you send stables like USDC through something as simple as a link. And when you click that link, it automatically sets up a wallet for you. It gives you the kind of security that you need as an individual, and just lets you start receiving money and start paying out that money within minutes. So those kinds of companies that just make this kind of product easier to use, I think, are going to be really successful in the fintech world. They're doing the things that Venmo did for us years ago, but now with stables. And the same thing will happen with developers too. Everything that Stripe has done for websites around the world to be able to accept payments, that's going to happen for stablecoins.
Mm. Question for you, given your background at JP Morgan and people can use stables without going through a bank, um, do you see the role of banks diminishing? Not that banks are going to be go extinct. I think there still needs to be banks here, but they're not going to have the same power they've had before. Maybe there's some consolidation there. Maybe it's just JP Morgan and Bank of America or what just a handful of names that are going to exist.
Yeah, I think if you really fast forward 20 years, 30 years, I think banks will look really different. And maybe some of it is a change in the power that they have within the financial system. I think that's happening in a lot of ways, whether it's because Bitcoin is becoming a bigger player within the overall monetary system, or if it's because payments is changing because of stablecoins. Uh, when consumers have more options, the ability to charge high prices or force customers into a particular way of using their money or having access to their money goes away, right? So, there was a period of time in 2023 when our portfolio companies were getting shut off from their banking accounts,
Mm.
right? This period of time when Silvergate and Signature Bank and Silicon Valley Bank all just sort of disappeared overnight. That was a really tough time for our portfolio companies because they have employees to pay, they have partners and vendors, and one of the ways they were able to get through it was through Bitcoin and USDC.
Wow.
All right, the ones that had some reserves or that were ready for this kind of situation didn't have to go through that kind of disruption, right? Their employees were paid on time and they never had to miss payroll. So it's these kinds of scenarios that force everybody around the world to think about, wait, things that I never thought about as risks might actually be risks. And, for me to protect myself against them, I should find some alternatives. So I think that in itself just changes the power that banks hold in our daily lives. But I think the positive spin on it is that it might actually help banks to go back to what banks were always good at,
All right.
which is giving us good advice, right? Helping us optimize our portfolios and just figuring out how to do things better rather than trying to control how we interact with our money. And so, my hope is that that continues to be the case, right? These are amazing people who have great expertise in financial products and services. That's the real product, right? So if banks can go back to being bankers, then I think that's a good outcome for everyone.
Yeah, well put. Um, we talked about stable coins, we talked about gaming, we talked about tokenization. Are there any other sectors in the crypto industry that you foresee might boom or do well?
Sure. Another sector that's been really intriguing is DePin.
Hmm.
So this is the idea that decentralized physical infrastructure networks can actually serve certain industries better than traditional companies. So in a way, it's almost like a new industrial revolution, right? The first industrial revolution was sort of us figuring out, wait a minute, machines might do things a little more efficiently than humans. The second revolution was, oh wait, companies are maybe a little more efficient than individuals at building things at scale. I think this one is the deep end sort of industrial revolution is really about networks being better at serving certain needs than companies. So, examples of this are helium in the bandwidth and Wi-Fi industry. That's pretty much as global and as physical of a network as you can think of, and there's always going to be gaps in it, right?
Sure.
The AT&Ts and Comcast of the world are not going to cover every inch of the globe.
Right.
Sometimes it's because it's too hard to access. Sometimes it's too expensive, so it's not profitable enough for companies to go there. But for a network, that stuff doesn't matter, right? The mechanism of allocating resources within a network can actually solve these kinds of supply and demand issues. So, where there's a demand issue that's not being met, there's a certain supply available somewhere around the world that is going to see it as easier to access, more local, more profitable, and it can go and fill in that gap. So, these kinds of scenarios, we're on the lookout for because we think that's going to be really transformative to some of these massive industries. And the great thing about it too is that it opens up participation to everyone. So whether you want to participate in the economic success of something like this or participate physically by having a helium hotspot or some other cases like Hive Mapper where you're supporting this geospatial kind of mapping industry, you can add a device that helps support the mapping effort. Those are all really cool ways that people can start engaging with blockchain technology without having to deal with wallets and in a way that really integrates with their everyday lives.
And on that note, this is something I've been thinking about because it's a larger economic conversation, and that is AI, automation, robotics. These things are growing, right? And they're going to take away certain jobs, as we've seen technology in the different industrial revolutions have done. There may be a period where it takes away certain jobs, and then eventually it might create new industries and things like that. But then there it goes back to how do people earn? How do they live? And then there's talks of universal basic income. But maybe things like this, where they can participate in networks and do things in their daily lives, can help supplement the income loss. I don't know, but it seems like it's a possibility.
Yeah, I think that's a great insight. Every time there's a technology shift, there's job loss, but there's also massive job creation. It's just it may not be completely obvious at the beginning what those new jobs are, right? And so, in my mind, there's jobs like participating in governance of a decentralized protocol that did not exist, 5 or 6 years ago, even. And now people are making money from that because that provides real value to the decentralized ecosystem. There's participating in these kinds of physical networks that almost extend everything that's been evolving with gig work and gig workers that really take this supply of time and resources and says, look, there's other ways to monetize that and still add value to the world. I think those are going to become crucial. And then, you raised AI as a point. Uh, I think there's going to be even more of a need for human participation in the digital world because, what AI has really done now, generative AI in particular, is it's made the cost of creation go all the way down to zero,
Mm.
right? And the result of that is going to be infinite content, and in some cases, fraudulent content, and low quality content. So, how do you get around that? Well, you need humans to curate it and to get us back to a world where we're surrounded by things we actually want to watch and things we can actually trust to be real. So I think that in itself is a job. And the way that you can compensate that kind of work is through a global network where you can make payments in stable coins. You can enlist people around the world and get them involved in this sort of new world we're coming into where humans and AI are going to have to figure out how to coexist.
Well put. And like I said earlier, a brave new world, but also a bit scary in certain ways.
That's
But
right.
we have the technology. One of the things, the concerns people have with AI and stuff like deepfakes, at least we have the technology to help police that, which is blockchains, and then AI also helps enhance certain blockchain attributes. And then when you have robots and what Elon's doing, and all these things that are going to come to fruition, you need digital currencies to operate in the digital world and that settle instantly and trustworthy and it's verifiable and all these things. So at least there's balance, I guess, if you want to call it that.
There's there's balance because there's actions and reactions, which is the awesome thing about technology. I think back when the internet didn't exist, we could only find each other through the phone book,
Right.
right? And we would get spam calls from people who just found our number in the phone book. And then phone companies invented anti-spam. right? They invented the whitelist. They invented ways for people to protect themselves against it. And that's just the nature of technology is there's a force and a counter force. So, I think the same thing is happening with AI and crypto. In some ways, crypto is going to enhance what AIs can do, right? AI agents being able to use wallets and being able to pay for things and invest in things through digital money, which is good and gives them even more functionality. But then crypto is also going to help us build things like digital identity and proof of humanity that will help us figure out, well, what is a deep fake versus what's authenticated by a real person on the other end through a public open identity network. And those things are only possible because now we have blockchain technology really going through this phase of becoming mature and useful.
Absolutely. Franklin, really insightful information. And I got some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
Ooh, well, that's easy. I mean, I've played RPGs my whole life. So if we could have a real metaverse, I'm going for something fantasy, Dungeons and Dragons themed. Just put me in there, give me a sword, give me some armor. That's what I want to experience.
Yeah, I would love that too. Rapid fire questions. Favorite food,
Pizza.
favorite musician or band?
Ooh. I've really started to fall in love with this band called Sleep Token. Not just because of its name, but because I'm sort of someone who loves metal, but is not hardcore enough for real metal. So, Sleep Token's been fantastic.
I'll have to check them out. Uh, favorite movie,
Oh, Gladiator.
favorite book.
Mm. The Phantom Toll Booth.
Mm. And when you're not working at Pantera, what are you doing for fun?
Uh, um, Hanging out with my daughter, going to the playgrounds, trying to find something to do to keep her entertained. Right now, we're on dinosaurs, so trying to visit museums and get her into um, uh, uh, fossils and whatnot, and trying to just keep her happy. So pretty
I
much that.
I know how that is. I have a 7-year-old, so I've been there, done that. Franklin, like I said, insightful information. I appreciate your knowledge on all these things, and we'll definitely have to have you back on. Pantera is certainly leading on many fronts, but thank you so much for joining me.
Thanks so much for having me, Tony. It's been a pleasure.